Coca-Cola is one of the most loved dividend-paying stocks. It's considered a dividend king, which is like the top tier of dividend stocks, and it's actually managed to consistently increase its dividends year on year for 60 years, perhaps even soon to be 61. Not only this, but Coca-Cola has also been able to outperform the S&P 500. Coca-Cola has not only been a drink that has been loved for decades globally, but it's also a stock that has made a fair few people very, very wealthy. So without further ado, let's dive in and see what we can learn from these so-called Coca-Cola millionaires. In the 1920s, a banker named Pat Monroe from Quincy, Florida, started to notice that people around him were saving up their money and spending their last few coins buying bottles of Coca-Cola. Now, he thought this was really, really weird because Coca-Cola wasn't exactly a necessity like food would be or clothes would be, yet people were still prioritizing spending their hard-earned money buying Coca-Cola even when there was economic hardship. So he just started to notice how much people actually love this drink and this brand. So this led him to decide to actually save up some of his own funds and buy Coca-Cola shares. And this later became one of the best decisions he ever made. And he started to believe in this company so much that he actually went on to persuade his neighbors to buy shares in Coca-Cola as well. This went even further. He actually even started to give loans out to people so that they could buy Coca-Cola shares. For example, one person came to him for a loan of $2,000. Not only did he give this guy the loan of $2,000, but he doubled it, with the one condition that this person was to use the extra money he gave him to buy shares of Coca-Cola. So it's safe to say he really believed in this company. As you can imagine, the town of Quincy in Florida started to have a growing number of Coca-Cola shareholders. The stock then crashed by 50%, but Monroe told people, don't worry, just hold on and keep investing. Not long after this came the Great Depression of 1929 to 39. Everything was falling. But oddly enough, Coca-Cola shares were not falling by anywhere near as much as other stocks out there. Because for some reason, people were still using their money to buy Coca-Cola. It became somewhat of an essential stock, a non-cyclical stock if you will, one that experiences stable growth no matter what the economic situation is. And not only did investing into Coca-Cola help the people of Quincy survive the worst and the toughest times of the 1930s, but it actually helped them get out of every single recession since. That's pretty powerful. After the recession, Monroe just carried on buying more and more Coca-Cola shares, and this actually led to 67 people from Quincy becoming millionaires, which is absolutely incredible because it wasn't the biggest population, but yet 67 of those become millionaires. And anyway, Coca-Cola shares just continued to surge. By the late 1940s, Quincy, Florida became the richest town by capita in the whole of the United States. And this can be put down to the simple fact of owning this stock. As investors, we always need to try and learn more. So what can we actually learn from these Coca-Cola millionaires? The first lesson we can learn here is how important brand loyalty is. Pat Monroe and maybe some of the other people of Quincy, Florida, noticed what people were doing with their money. They were using their money to buy Coca-Cola. They weren't using it to buy other drinks or, other versions of this drink in particular. They were loyal to Coca-Cola. And of course, brand loyalty then gives pricing power, and it allows a brand to be established and to earn money over long periods of time. And this is exactly what Pat Monroe noticed. If there isn't brand loyalty there, then what could happen is economic hardship could come along or whatever it may be, and people will just simply turn to the cheaper option. And then of course, that leaves the company with not many customers. That is never a good thing for the company nor the shareholders. So brand loyalty is really, really key, especially with companies like consumer good companies, consumer staples, things like that. The next lesson we can learn is really important, I think. In this day and age, in investing and in life in general, we tend to overcomplicate things. We tend to get really down to the fine technical details, and oftentimes we fail to step back and look at the bigger picture. But one thing that Pat Monroe did really, really well is he understood the business, and he actually kept it simple and looked at what was actually happening. So let me explain. When you're going to invest into a business, you really need to understand what that business does. And you need to know the real life applications of that business. What are they selling? Why do people love them? So on and so forth. It's all well and good knowing about the balance sheets and the financial ratios of a company. And that stuff is really important as well as an investor. But there's definitely something to be said about keeping it simple and actually understanding the business you're investing into. The next one is to do your research and have conviction. It's this high level of conviction when you really, really, truly believe in a company and believe that that company will do well over long periods of time. That conviction will keep you to stay invested and holding on when the stock price is going all over the place. Maybe it's trading sideways for many years. Maybe it's going down, whatever it may be. Knowing why you're investing. And also knowing that the intrinsic value of the company is not the same as what you see the stock price as. The next one here is to have a long-term mindset. And this is really, really important in investing. These people were only able to become millionaires because they let time do its thing. They let capital appreciation plus compounding take effect. The last thing is not to get sucked in by high dividend yields. Coca-Cola has never had an extremely high dividend yield, but what it has been able to do is consistently grow its dividends and its business alike year on year on year. And it's then reinvesting those dividends to buy more shares and seeing the capital appreciation of the stock that really becomes powerful. The next example of a Coca-Cola millionaire is perhaps not so much of an average everyday person as what we just saw in the last example, but he did start off as an average everyday person. Now he's perhaps the most famous, the most successful investor in the whole world, and that is Warren Buffett. He began investing into Coca-Cola in 1988, and by 1989, he had purchased $1.8 billion of Coca-Cola. And this happened after Black Monday when the stock market absolutely plunged. So this goes to show you just how bold of a move this was for Warren Buffett. And I think this really, really tells us that he actually lives and breathes his own words. When he says, be greedy when others are fearful and fearful when others are greedy. This is exactly what he was doing. I'm not sure many investors around the world would have had the stomach to purchase that amount of shares in a company following Black Monday, but he did, and hey, it paid off. Over the years, Berkshire Hathaway, which is Warren Buffett's company, has steadily increased their holding in Coca-Cola. And today they own about 400 million shares. And that makes them one of the company's largest shareholders. Apple is actually now Berkshire Hathaway's largest holding, but even so, all these decades later, Coca-Cola is still in his portfolio and still makes up, I think, 7.57% of his entire portfolio. And that may seem like not a great deal, under 8% of someone's entire portfolio. But when you step back and you think just how big his portfolio actually is, you'll appreciate that that amount of shares in one stock must mean that he truly believes in the company. And to demonstrate this, with 400 million shares, Berkshire Hathaway makes $176 million every 3 months in dividends alone from Coca-Cola. That to me is absolutely mind-blowing. That's almost $750 million per year from just one of his stocks. And that is just dividends. That's not even taking into account capital appreciation either. It's crazy. Overall, Warren Buffett's decision to invest in Coca-Cola has perhaps been one of his most successful investing decisions ever. And it really goes to show you that picking a good company and holding for the long term can really pay off. Now, I do realize that not everyone has millions and millions that they can actually use to invest like Warren Buffett, but I do still think there are some really important lessons that we can learn from him here. The first one we saw with the previous example, but it's this idea of having a long-term perspective. Warren Buffett saw a company, he believed in it, he did his research, he bought the company, and then he held on for decades and decades, and he still holds the stock to this very day. He doesn't care what the stock price is doing each day. If anything, it's an opportunity to buy more for him. He doesn't care that people are saying this and that about Coca-Cola or any of his other shares. The thing that matters the most to him is the intrinsic value of the company. Does it have an economic moat? Does it have brand loyalty and pricing power? All these things collectively help him make a decision as to what to invest in, and then he ignores the rest and holds on. The next one is quality over quantity. Instead of buying and selling out of many different positions in order to make a quick profit, he decides to focus on a fewer amount of companies and know them really well. He makes sure that he's confident that these companies will be able to deliver him solid returns over time. The next one I've already spent some time speaking about already, so I'll keep it brief, but it's brand loyalty. Coca-Cola is one of the most recognized brands across the whole of the world. It has a really strong, loyal consumer base, and this obviously gives it pricing power, but it means it can stay somewhat steady during economic downfall, and that's really important. And the fourth lesson we can learn from Warren Buffett's investment into Coca-Cola is this idea of patience. He didn't expect immediate results from his investment. He didn't expect to get rich quick overnight. Instead, he was willing to wait it out and let the stock price increase gradually over time. So this leads on to thinking about what sort of returns you can expect from Coca-Cola. I actually managed to find an online calculator, so this won't be extremely accurate, but it will definitely give you an idea. If you had purchased 100 shares of Coca-Cola 10 years ago and you reinvested those dividends, you would have made a 926% return, causing an original value of 6.5 thousand to now be worth nearly 67,000. So with all this said, and all these lessons that we've just learned, I think the next logical thing is to start thinking about where we see Coca-Cola in the future. What is the outlook of this stock? This is somewhat subjective. Different people will have different opinions and will do their own analysis, but just some things that I want to point out here that I've personally thought about. The first one is just the fact that they have such a strong brand. They have brand loyalty. They've proven this time and time again. There's been so many recessions that Coca-Cola have just pulled through. So many times when people should theoretically have used their money to buy other things and perhaps cheaper versions, and people just haven't. They've been loyal to Coca-Cola. So who's to say that won't happen continuously in the future? And this obviously gives them pricing power. When times are tough, they're tough for businesses as well, and they can increase their pricing should they need to. But then you could argue this with the fact that maybe other brands will come along that will be a competitor for Coca-Cola. Perhaps people will start turning to cheaper options. You know, we have lots of these discount stores here. Now in the UK, we have Aldi, we have Lidl, even the big ones like Tesco and Asda. They all do their own versions of Coca-Cola, and perhaps people will start looking for the cheaper option. You know, it is sort of 50% price difference, so who knows? The next thing that I was just thinking about is that as a population, we are becoming more and more intelligent, and we are becoming more switched on to health concerns and what keeps us healthy and the impacts of sugar on our life. So maybe more people will start turning away from these fizzy drinks, you know, Coca-Cola being absolutely jammed with sugar, and maybe considering healthier alternatives. But also, maybe they won't. Maybe people will just carry on enjoying this drink. And my last thought here is just how strong Coca-Cola is as a business. They have been able to increase their dividends for like 60 years. And to be able to do that, you have to have a strong balance sheet and strong financials. And they really shine here. Now, I'm sure there are things about Coca-Cola that I've just missed in this video, perhaps some downfalls of the stock, whatever it may be. If you want to add them for other people to see, leave them in the comments below. If you want to consider joining my Patreon where you'll get Discord access, then I'll leave a link in the description below. Definitely go and check that out. And also if you want to get a t-shirt like me, Eat, Sleep, Invest, Repeat. They come in 6 colors, and again, I'll pop it in the description below. Thank you for watching, and I'll see you soon in another video.